to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, this week's market wrap with commentary and analysis from Money Metals Exchange, the company named Best Overall Precious Metals Dealer by Investopedia.
Welcome to this week's Market Wrap podcast. I'm Mike Gleason. Another hotter than expected inflation report jolted markets this week. On Thursday, the Labor Department released the latest Consumer Price Index report. The CPI surged 7.5% in January from a year earlier. That exceeded most forecasts and marked a new four-decade high for consumer price increases. Brian Chung of Yahoo Finance gives his take on the situation.
Prices rising in the United States across the board by 0.6% on a month-over-month basis. If you index it over a year-over-year period, 7.5% was the growth that we had seen in the report. That is well above the street's estimates of 7.3% and continues to ratchet up. We've seen Joe Biden talk very frequently lately, anytime he has the podium, about the impact of inflation on Americans. That's because this is becoming a huge, and already is becoming a huge political issue for him. Now, of course, all eyes are not just on the White House and Congress where they engineer fiscal policy, but on the Federal Reserve as well, where the extraordinary monetary stimulus has obviously led to some sort of demand push that is leading to inflation that is not fading as fast as Federal Reserve officials had originally hoped or messaged in the beginning of 2021. That's going to be a very interesting story as we get to that mid-March meeting where the Fed is expected to start raising rates.
Rising prices are a reflection of a falling currency. The U.S. dollar is rapidly losing value as the Federal Reserve keeps ultra-loose monetary policy in place. Fed officials are, of course, talking about tightening. They are widely expected to finally begin lifting interest rates at their March meeting. Expectations are growing for a 50 basis point hike instead of the typical 0.25% hike. The Fed hasn't executed such a move since 2000. St. Louis Federal Reserve Bank President James Bullard said he now supports raising interest rates by a full percentage point over the next three policy meetings. That would imply at least 0.5% hike. Bond yields rose sharply on the news while stocks gave back gains. Precious metals markets also reacted to the threat of steeper Fed rate hikes, but gold and silver managed to hang on to most of their gains from earlier in the week through Thursday's close. As of this Friday recording, gold prices check in at $1,841 an ounce, up 2.4% since last Friday's close. The silver market shows a weekly gain of 3.2% to bring spot prices to $23.29 per ounce. Platinum is essentially unchanged for the week to trade at $1,024, and finally, palladium prices are down 7.6% this week to come in at $2,227 per ounce. It's possible that metals rallies will continue to be capped until the Fed does make it official and raise rates next month. The psychology of markets is such that fear of something happening triggers selling pressure. But when the adverse event actually occurs, traders often breathe a sigh of relief and cover their short positions. Markets typically move before the news rather than in response to it. Today's trading now reflects an expected 50 basis point rate hike with more hikes to follow. Unless something totally unexpected occurs during the Fed's next meeting, there's no reason for investors to make drastic adjustments to their core positions. The fundamental case for owning gold and silver is strong and will remain so after the Fed starts hiking. With inflation now running at 7.5% officially, the central bank would have to initiate 15 rate hikes of 50 basis points each in order to get out in front of it. There's no chance that will happen. Meanwhile, the supply and demand dynamics for metals are trending positive. On Wednesday, the Silver Institute reported that it expects demand for physical silver to reach a record high of over 1.1 billion ounces this year. That would represent an 8% increase from 2021 and likely outpace any mining supply growth. The Silver Institute cites rising industrial demand as the global economy emerges from supply chain bottlenecks. Longer term, it expects continued demand growth from green energy products, including solar panels that are being installed at a record pace. And the kicker for the silver market is that investment demand is expected to grow even faster than industrial uses. The Silver Institute forecasts sales of silver bullion products to surge 13% higher in 2022. We continue to see robust buying of silver coins and rounds here at Money Metals Exchange. Some who are new to precious metals investing may be confused about the difference between coins and rounds. They both have the same sizing and purity and sometimes even feature similar design elements. The only real difference is that coins are produced by a government mint and generally have a face value, meaning they are legal tender. A round is produced by a private mint. It won't have a face value. A round isn't legal tender in any particular government currency. Does the legal tender value of an American silver eagle, for example, make it superior to a privately minted round? The answer is not really. The intrinsic metal value of a silver eagle far exceeds its face value. The face value is never likely to come into play in any conceivable sale or trade. Coins such as American eagles tend to have significantly higher premiums than rounds. By opting for rounds, or bars for that matter, instead of coins, you get more ounces for your money. In other news, Money Metals is moving forward aggressively in about a dozen states to promote sound money policies, including repeal on unjust sales and income taxes on gold and silver. Sound Money Defense League Director J.P. Cortez traveled to Nashville, Tennessee this week to testify in a state committee hearing in support of a sales tax repeal legislation pending there. Take a quick listen.
Hicks, members of the Finance, Ways and Means House Subcommittee, thank you for the opportunity to testify before you today. My name is J.P. Cortez, and I'm the Policy Director for the Sound Money Defense League. I ask you to please vote yes on House Bill 1874 when the time comes. This is a measure to remove sales tax on gold and silver coins and bullion. Just 2 months ago, the Tennessee Advisory Commission on Intergovernmental Relations released a report on the feasibility of establishing a state bullion depository. While the task report decided that ultimately right now is not the best time to do that for Tennessee, they pointedly concluded that Tennessee should consider eliminating the sales tax on gold and silver. There's a national trend to remove this sales tax from precious metals. According to the TASR report, 42 states currently have already done so, in whole or in part. Mississippi, Hawaii, Kentucky, and New Jersey are expected to consider eliminating this tax right now as well. So of the 8 states remaining, 5 are currently considering with active legislation to remove this tax as well. So under current law, Tennessee citizens are disincentivized from protecting their savings in gold and silver because of this unfair tax. And so the House Bill 1874 would remove the disincentives to allowing people to store their gold or to store their savings, their wealth in gold and silver at a time when inflation, at a time when the consumer price index is higher than we've seen in 4 decades. Taxing gold and silver essentially serves as a de facto investment penalty. Tennessee doesn't charge sales tax on stocks, bonds, ETFs, cryptocurrencies, real estate, any of that. These are assets held as investments for resale. And so for that reason, a sales tax on these assets would be inappropriate. Purchasers of these metals are not consuming them. They're holding them for resale. As Representative Halsey mentioned, the taxing of precious metals, the monetary metals, also undermines Tennessee businesses. People are leaving the state. Tennesseans will buy or store their metals in other states. Alabama, Georgia, Missouri, North Carolina, Virginia, all of these states have already removed this tax. And Tennessee business dollars, Tennessee investment dollars, they're all going there. It's also true that revenue collected from this precious metals tax that's currently in place would almost certainly be surpassed by the tax that the state would receive because of conventions coming back in the state, because of tourism dollars, because of the second order effects that come with allowing this industry to thrive in the state. So by voting yes on House Bill 1874, you'll be following an example set by 42 other states across the country. You'll be reducing the tax burden on your Tennessee taxpayers, and you'll be allowing this business to thrive and allowing people to protect their savings, their wealth, with an inflation hedge that has served that for millennia. So thank you for the opportunity to testify before you today, and I'm available for any questions if there are any.
All right. Thank you, Mr. Cortez.
J.P. Cortez and his team have been hard at work advocating for these important policies. Please keep your eyes peeled for Money Metals email action alerts regarding sound money legislation that may be pending in your own state. We can tell you with certainty that your calls and emails to lawmakers really do make a difference. Well, that will do it for this week. Be sure to check back next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Gleason with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes. For answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds, call 1-800-800-1865. or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by to answer your call during business hours, Monday through Saturday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.